So good morning, all. Thank you for joining the third in our series of ESG-related webinars. So today we are looking at the reporting side and how you communicate your respective journeys. So hopefully for all of you, you've tuned into the right session this morning. We have a wide number of attendees today from across the professional services space. So thank you all for taking the time out this morning to join us. I would just flag as well, for those of you who aren't familiar with Zoom, that we have a Q&A function. So please do note any questions that you have throughout. We will take some time at the end to be able to answer them. So my name is Fiona Davis, for those of you I haven't met before, and I'm a partner in our digital risk advisory services team here in London. I've personally been very much involved in the ESG space for many a year, very much supporting my clients at various stages of what was then coined CSR or sustainability, and now very much the ESG journey. So like Matt White and Nicola Nally from our last session, I also sit on our BDO ESG advisory exec, linking in as a result of what I'm doing in the market with my own clients on this agenda, so bringing that perspective to things. So I'm going to move to some intros in a second to our lovely guest speakers who I'm delighted have joined us today. But firstly, I thought it would be helpful to recap on those areas we have already covered through the prior two sessions, just to help contextualize the focus for today and recap for those of you who are joining us for the first time. I think there are a few of you out there. So it would not have been in any way possible to cover ESG in one session due to the breadth, the magnitude of the topic. So we have been lucky enough to have two tiered sessions on this to date. In our initial session, we covered the context setting aspect, very much what is the ESG, demystifying it for everyone, the evolvement of the role of business in society, and then looking at why ESG is important in the professional services sense. So then more recently, just over the last few weeks in session 2, we heard from Tim House and our own Nicola Nally, who's our head of comms, on the creation and embedding of ESG strategy, which is a topic many of you have been very interested in. And that was very much from the concept side with Tim to then the practical side in terms of what we have been doing at BDO, which is the starting point for many of you. So these are available on our website for those of you who missed out before, or indeed those of you who are looking for a refresh and can go back and see all 3 sessions beginning to end. So today we turn our attention, as I said, more to the reporting side and what you should be thinking about as you track and communicate your own journey. And we're going to take a slightly different format today to more of a panel discussion, so that we have the opportunity to probe and share more as a collective panel, and equally to allow you at the end, as I said, to ask any questions. So Mel, can we just move to the next slide, please? So without further ado, I would like to introduce you to our guest speakers today from Baringa and Barclays. So Emily, if I can kick off with yourself.
Thanks, Fiona. Good morning, everyone. So I'm Emily Fairmont. I lead ESG and sustainability at Baringa Partners, and I think it's safe to say sustainability is absolutely my personal passion. I've been studying for a Master's in Sustainability at Cambridge Institute for Sustainability Leadership. Some of you may have heard of it if you're particularly interested in that topic area. And I think continuous learning is really, really important to help us be at the forefront of what is quite a complex topic. Just in terms of Baringa Partners, we're a global FT gold medal holding management consultancy who've consistently won awards for our people proposition. And I mention that because it's really, really important to us as a business in the context of sustainability. Baringa is a purpose-driven business, and Prioritise Climate Change is our #1 campaign many years ago. That's it from me.
Thank you, Emily. Just moving on to Marco then.
Great, thank you, and thank you so much for the invite to speak on this today. Yes, so Marco De Benedictis and I head a team called the Sustainable Products Group at Barclays Corporate Banking, where we look to support businesses with green and sustainable variants of traditional banking products, really to help support their ESG strategy. And prior to setting up this desk, just a couple of years ago, actually, just pre-pandemic, I also dealt with our portfolio distribution platform, which was talking to investors, asset managers, and pension funds around what the underlying risk of a particular loan portfolio might be, and looking for investors to participate in that. And I guess that also gave me a good insight into what ESG means from an asset management perspective, an investor perspective, an equity holders perspective, as well as being a lender as we are today.
Excellent. Thank you, Marco. And last but by no means least, Yasmin.
Morning all. Great to be on this morning. I'm Yasmin Nabi. I sit within the sustainability team in the corporate bank as well. I've been at Barclays for 16 years and spent the majority of my time in the lending space, leading transactions of 25 million plus to support acquisition activity, working capital, and general corporate financing across the UK and a number of sectors, including the professional services space. I moved across to the sustainability team last October to lead the transition strategy for those clients in that segment in the corporate bank, and as well as continuing to drive the transactional activity through an ESG lens, which has really moved up to the top of the agenda when it comes to financing options. And ESG actually is forming part of pretty much every conversation I'm having at the moment.
Thank you, Yasmin.
That's all I was going to say.
Very good point. ESG very much the top of most conversations. So clearly lots of experience amongst the panel today, lots of passion in there too, which is very important to this particular agenda. So thank you, a great blend here in terms of stakeholder side and the practical implementer side in terms of Emily and team. So very much looking forward to a good discussion on this. So Mel, if I may move to the next slide, please. So we're not going to have death by PowerPoint today, guys. We're going to use this particular slide as a basis of our conversation, really to guide us through the key points that you're going to need to take away from today. So if I just look to the left-hand side of this as a starter. So as I said, reporting very much the thrust of today. There's not a one-sized approach for everybody. So apologies for those of you who thought you'd be coming on the call today and coming away with, here you go, here's what you have to report exactly, job done. It's going to be very different for all based upon your different stages of maturity in dealing with this. So perhaps if I take a second just to reflect on where reporting has come from over the years, and as I said, just looking to the left of the screen here, I think rhetoric has very traditionally been about CSR related activities, and these have varied massively across businesses and sectors because there's been a lack of comparable metrics available. It's never really graduated beyond being an add-on to reporting, maybe a footnote in an annual report. So at worst, it's become very much a marketing tool that may resonate with many of you as you think about what that final comment will be in your reports. So this has, as a marketing tool, perhaps allowed a business to say what it's doing well without really having to back up claims or talk about areas where it may be failing. But when we're talking about ESG here, on the other hand, it's generally quantifiable to a far greater degree. So we will get to that quantification later. So we're very much moving beyond, to coin a phrase of prior days, the social responsibility of business is to increase its profits. Well, we're in a new era, much higher expectations on the role of business today. That's all changing. So the why of reporting and key drivers, one of the areas we say we covered today. If I may therefore begin with a key influencer of what should be reported, and that is the range of what stakeholders themselves are asking for. So I'm going to kick off with shining a light on consideration of who these stakeholders are and very much the importance in the professional services space. So if we recap to our last session with particularly the one where Tim House spoke, he talked about the must, the should, and the could of reporting. So maybe we can start with the must for all, and that is very much the regulation angle. So Emma, maybe going to yourself first, would you like to give a bit of an overview of how this has evolved and influenced reporting, particularly in the professional services space? Sorry, Emily.
Yeah, of course, absolutely. So, and I think, Fiona, to be honest, I think it's a really, really interesting observation around the kind of the must of reporting, simply because actually is just the regulatory minimum, specifically in the UK, the must of what you need to report, or is it broader because actually you're demanding, other stakeholders are demanding that that's really, really important and that they feel they need to understand that to be able to invest in you, to lend to you, those sorts of questions. But if we look at specifically the the reporting landscape in the UK, I guess the key elements to be aware of specifically are, we obviously have SECR, hopefully you're all aware of the Streamlined Energy Carbon Reporting. That's for publicly quoted companies and private companies which meet the large category under the Companies Act. And that's really about reporting if you're kind of au fait with the language, your kind of scope 1 and 2 emissions, so the emissions really from your core business activities. And that is in place today, so people should be reporting on that. I think there is a little bit of a blend as to the adherence to that. Generally, we find across organisations, but broadly that is in place today. We then have, I'm sure many of you have heard of it, the Task Force for Climate Financial Related Disclosures, so TCFD, and that will be mandatory across the UK by 2025. However, there's interim milestones, as there always are with these things. So there's a deadline this year for banks, insurers, pension schemes, and premium listed companies. And so then 2022, I suspect, will apply for much of this audience, where we'll see UK registered companies and a wider scope of listed companies fall under the requirements for TCFD. And that's specifically, though, to the UK and kind of driven by the regulator here. We've then got a couple of other areas where we're expecting some change over the course of the next couple of years. So the UK Corporate Governance Code, which is really about kind of effective board practice, and it ties in really nicely with TCFD. So if you look at the kind of the core elements of TCFD, one of the items you need to be able to demonstrate is that there are climate considerations across the board, that the board is appropriately remunerated based upon climate. And this code kind of is looking really to make sure that the board works effectively. And we're expecting stricter enforcement and broader requirements aligned with that code to come into play into 2022. The expectation is that might be more prescriptive in the governance elements of TCFD. We then have the UK Stewardship Code, which sets high stewardship standards for entities investing on behalf of savers. I suspect not that relevant to a number of people in this audience, but it is quite relevant in terms of just standards of behaviours and expectations. In terms of then what we're expecting in the UK, there are a number of key things just to be aware of, and I'd suggest to keep your eye on. So SDR was announced by Rishi earlier this year, and the expectation that the UK is going to have not just SECR, which is specifically deep delving on the environmental element, but an ESG type of reporting that we expect to be very, very similar to the EU's SFDR, for those of you who are aware of it. So it's called a Sustainable Disclosure Requirement, and we expect it to cover both the existing frameworks included within TCFD, but also build out further towards some of the societal metrics, including items such as diversity and inclusion. And if you're interested to learn more about that one, what I would suggest is if you look to the EU's SFDR reporting requirements, which come into play this year and next year, that will probably give you a view as to what SDR might look like. The other point just to be aware of, and I don't know if everyone saw the press over the weekend about biodiversity in the UK and actually how terribly we perform, in particular in relation to the G7, but actually globally. TNFD then is the Task Force on Nature-Related Financial Disclosures, and it is basically looking to build upon TCFD reporting, but really, really look at biodiversity, nature-related risks and opportunities. And we're expecting that framework for reporting to be tested in 2022 prior to its launch in 2023. So for me, those are a few of the kind of the key things that you need to be either doing today or preparing to do very shortly.
Thank you, Emily. Quite a few takeaways from that, actually. I think a key point for me is it's across the E, the S, and the G. It's not COP26 coming up. It's not all about the E. It is very much variable. And I suppose another key point from that is that we have seen a concertina of requirements, where they have maybe trickled in over the years. It is very much growing momentum, Emily. Do you say, in terms of the magnitude, the number, very much, as you say, heading across that space. So lots to consider for everyone there, and very much, as we say, on the must side of things and what you should be doing and keeping your eye on this regulation aspect of things. So regulation, a big area, but Marco, when we've spoken about this in the past, we've talked about the carrot and the stick, or the must, the should, and the could. Once again, maybe you, from your stakeholder perspective, give us some insight in terms of what is important to you and how you communicate this to your clients.
Yeah, and I think it's really interesting to consider, because I guess if we go further back, the idea of CSR, it's not. ESG is not necessarily a new thing, right? Let's be very clear here. All of the constituent parts being put together and being seen as an investable asset class for investors and pension funds and asset managers, that is probably a little bit newer, I would say. So the idea of ESG, impact, sustainability, they're not really new concepts, but I guess at its essence, and what we like to think about is really, have we as a management team or a business given due consideration and thought to what our lenders, equity holders, regulators really care about, right? So I guess if I take it as an approach from a lender's perspective, I think ultimately, the lender cares about two things, really: the probability of default, right? So the credit worthiness of the counterparty, and then also, I guess, how those profits are being made or that cash flow is being generated. So I guess when we think about it from a lender's perspective, we do have large, vast portfolios, the same as other types of investors, and really it's a very much about comparison, right? So that's why the ideas of frameworks and standards become so much more important, because if I'm a portfolio manager and I sit in a pension fund and I'm trying to compare two assets, how can I price them appropriately for my stakeholders if I don't know if I don't know the true risk of what I'm holding? And no, well, I guess pun intended here, it really is about the sustainability of future cash flows, to think about credit worthiness and to also think about equity valuation. So I guess that's a context by which we kind of think about it in its purest sense of the word. And if you take two identical companies, one with a sustainability strategy and one with a more archaic, shall we say, non-focused on sustainability strategy, you could actually see differences in both the probability of those future cash flows and potentially the weighted average cost of capital, which is basically bankers speak for a higher valuation for the sustainable business. What do we ask for from our clients and as a stakeholder? Well, I think the good thing is it's definitely a prioritization thing. So the higher risk you are, the more likely you are an emitter, the more likely you're going to be asked a lot of complex questions. I don't believe that there'll be many people that fall into this bucket sitting on this call. But I guess then when we look, as we come down the curve, we actually look at how profits are being made for that individual company, and everything is bespoke. Every business is different, but we will generally start from, and the questions that we will ask will be really trying to understand where you are on, you've mentioned it before, Fiona, sustainability journey. Where are you? Just starting? Is it, are you reaching maturity? And really, how developed is that? And how can you be seen as a responsible investment or a responsible lend? That's the first question. And then secondly, after that, is actually, are you ready to use financial products which can enrich that? If you're too early in the journey, then maybe certain products will be off the table for you. But as that develops, it's very early in this consistency and in this transparent part of the market. So I think actually, whilst it seems like ESG is this big impenetrable thing, I don't actually think that it's that difficult to start being curious and start focusing on a few items that could really work for you as a business. So what we ask for, we ask to see, where you, or try to find out where you are on your sustainable journey, and that can be from finding out from your ESG report what your source of income could be, where you're looking to make money, and in the future, how are you taking the challenges, be it from regulation or be it from systemic change in the market or in your sector or whatever it may be, and how ready are you, which really feeds into probably the most important part, the governance bit, as a management team or as a business, how ready are you for these future challenges? So unlike many other parts of a loan document, and maybe I'm saying this slightly facetiously, when we look at sustainability performance targets, it's not a zero-sum game, right? Because the business that is putting together a financing package that they're going to use, and also a bank, we actually want the packages to be appropriate, sufficiently stretching, and also verified in the right way. So you put all of those things together, and I think actually we're in a very interesting part of banking in particular. But really, it starts from understanding where you are on your sustainability journey.
That, Marco, thank you, was a perfect answer, because it's actually supported the points we've been raising throughout the prior sessions. So some key takeaways from yours: expect lots of questions from you. You want to hear about the groups, the businesses, individual stories within this. I think this very much plays back to what we talked about at the beginning in our prior sessions about strategy, about really setting out your key value drivers within your business, as you say, how you make money, understanding your risk profile, associated opportunities within it. So thank you. That very much supports some of the points we've been making to date. So I think a key message for all of you here is really thinking about what your individual story is on this, and be prepared for the likes of Marco and Tal to be looking to understand this from you. So lots of points in that once again, Marco, so thank you. Just thinking here once again about that, Clara, use the word comparability in there, Marco, and we will get to that point later in terms of what we're looking for in terms of practices. But one point, or one of the key drivers or stakeholders that we haven't quite picked up in detail yet, is around the employee perspective side. And if I may just take a second on that one as well, because I know from many of my professional services clients, this particular element has really come to the fore, particularly over COVID, very much a spotlight in terms of that S aspect of ESG, and an expectation of what businesses are doing around this on the people side. Just to give a little bit of flavour of that, we're really seeing that millennials are now obviously a major demographic, representing, I think it's over 35% of today's workforce, Generation Z, around 20%. So these demographic groupings, they especially value the issues addressed by ESG and put this as a top factor in their decision-making process. And I know all of you out there, we're all feeling the pinch in attracting the right employees amongst a ever-shrinking pool. But as an example here from a professional services sense, we at BDO ourselves, one of the success factors we have had in terms of attracting candidates has been on our own culture report, reflecting our story, what we do across many of these aspects and associated metrics around it. So a massive driver in terms of a need to see what is happening across the wide range of the E, the S and the G agenda. So really quite a few more points to get through today, folks. So just to give you a bit of a flavour on that. But Emily, I'm just thinking, I mean, at the beginning, you mentioned very clearly from a Baringa perspective, people was a massive aspect for you folks as well. You know, any other insight from a Baringa side of things in terms of key drivers then for you as an organisation?
Yeah, and I think for us, it's actually in three key areas, Fiona. So I think the people point is really, really important, and actually having purpose in our organisation is absolutely for us a game changer in terms of attracting talent. So the work that we do specifically in climate, broader work that we do across the sustainability agenda, and then the fact that we've got a people proposition that we want to tell a story about, that we can put in reports that's really, really credible, is also really, really supportive. I think secondly, it's about partnerships, and partnerships is so important in the world of sustainability. And actually, people want to work with other organisations who genuinely are sustainable at their core, and can demonstrate that. So I think it's important in terms of how you form partnerships and who you form partnerships with. And then I think also for us, our clients could be Marco and Yasmin, and Marco and Yasmin will say to us through their procurement process now, actually, you know, if you're telling us that you are experts in this, we want to see how that flows through your organisation. And so it's absolutely really important to us in terms of attracting the best clients that we want to work with as well.
I mean, I think actually that is a really good point, because there may be some of you who are sitting there reflecting on points that have been raised to date and say, well, I'm not a listed business, it doesn't apply to me, many of these points. We're talking about regulation and what we must be doing, but actually that's not really applicable. I think this really, I mean, to your point, brings us into the realms of what we should be doing as well, because there is that clearly that expectation out there in terms of who we're dealing with, supply chain, vendors, etc., that they uphold the same disciplines that we do as organisations, the same track record in terms of our similar track record across the E, the S and the G agenda. So to have that basis of comparability and not therefore be impacted from a regulation, or from a reputation perspective, should there be any issues exposed in terms of those we do business with. So I think that will be a very telling point for many to have you actually looked at who you do business with. Have you done any assessment of them in terms of where they sit on this agenda? So I think good food for thought on that. Thank you, Emily. And thank you, Marco. So we have heard a range of driving influences that's shaping this must, should and could. So thinking now about how this is reported and thinking about the reporting frameworks aspect out there. This has been a real point of confusion for many. This is where we get many of the questions. And this is where some consider really the alphabet soup out there in terms of choices of which frameworks or standards to adopt for reporting. And I've personally worked with many on a range of these, mostly in recent years over GRI, but there's not necessarily a right or wrong answer here. So in our particular slide here, we have outlined about the frameworks at the bottom, just a peppering of the key ones, of which there are many. But I'm going to go to you first again, Emily, just in terms of if you could maybe talk us through the landscape and really range of standards you've seen adopted, particularly in the professional services space. That would be great.
Thanks, Fiona. So I think the key consideration here, the one thing that I wanted to say is actually try not to get confused by it all, because there's so much out there. And actually, I think not necessarily understanding the landscape and everything there is the most important thing. I think it's just about finding the right thing for you and your organisation. I think that's kind of the most important piece. So that would be kind of my counsel here. What I did want to do is I wanted to start with the Sustainable Development Goals, not because that's really a reporting framework, because it isn't really. In its essence, it's a collection of 17 interlinked global goals, which are designed to support in driving a blueprint for a better and more sustainable future for everyone. It was set up in 2015 as part of the United Nations. And the reason why it is useful, however, is that you can use it in order to message to your stakeholders the change that you're trying to drive. And that can be the change you're trying to drive within your organisation from an ESG point of view, but actually the change your organisation is trying to drive within society and across the planet more broadly. So for us, for example, at Baringa, climate action is a really, really important SDG for us, both internally in terms of the CSR type work that we do, reducing our internal carbon footprint, but also the work that we want to do across the market. So the SDGs really, in my mind at least, is a nice way to tell the story to the various stakeholders that you've got about what you're prioritizing from a sustainability point of view. But actually, I think it's not something to necessarily get too hung up in around the detail, because a lot of the actions associated with each of those individual SDGs are really about governments and the world in its entirety and the types of action they need to take, not specifically to an individual organisation. So I think you then need to interpret that and decide which parts are relevant to you and which may not be. Just in terms of then other standards that there are out there, I guess there are a wide range of them. I think, Fiona, you mentioned GRI, which is kind of supports with guidance around disclosures across environmental, social and economic factors and the types of messaging that you need to give to each of the different stakeholders. I guess it's really well utilised globally and reasonably well known, because it also relates through to the kind of United Nations Global Compact. It also covers most categories of sustainability activity, and I think it's just quite a nice way to sort of have a broad brush overview of sustainability, if that's what you're looking for from an organisation. There's then a couple of frameworks which are really more kind of accountancy based. So you've got the integrated reporting framework, you've got SASB, you've got not CRD, I can't remember. There's another one. I will dig that out. And there's a couple that are really, and then we've managed to do a great job in the world of sustainability and ESG in creating a vast number of acronyms. Yes. But there's a number really which are more about accounting standards and how, as a CFO of an organisation, you need to reflect things like carbon disclosures in your report and accounts, and how you need to audit those. So those are perhaps much more technical, and I would suggest probably less relevant for this audience. One of the things that I think would be really helpful for this audience, and I think it plays into some of the points that Marco has made, is just around CDP. So CDP is a non-government, is an NGO. And what it basically does is it's kind of a platform which collects climate-related data. And that platform is quite useful because it actually feeds its data then downstream to other tools across the market. So it feeds S&P and Bloomberg, just to name a couple of other data providers. And what it essentially does is it asks you a series of questions about your emissions baseline, your emissions targets, and some of the core elements of TCFD requirements. And you can just, and it will give you a rating on the basis of inputting that data. Now, the reason why I think CDP is quite good is because it's got really nice close alignment to TCFD. And as I said, it also provides a mechanism for downstream feeds into other data sources. And what that means is that rather than having Marco and, HSBC and all of the other financial institutions across the market and everyone else that you want to work with knocking on your door to ask you for data, by completing the CDP report, in theory, that should lessen the requirements, because you've provided it on a platform and you can suggest to people that's a really great place to look for climate-related data about my organisation. So I think that's a really, really, helpful platform, one which I think is worthwhile organisations signing up to. And they have amazing coverage. They've got 10,000 companies, cities, states, regions reporting on the risks and opportunities associated with climate change. So I think that potentially that's a really, really helpful one to utilise. The other thing I was going to say is, rather than going to detail about numerous others, is there are numerous others all the time, and actually there are always new ones popping up. What I would suggest is, and it might be worth your time understanding those, but I think there are some reasonably well-known, large-scale reporting frameworks available, and it's probably best for the size and scale of the organisations, I'd suggest, who are who are on this call to just think about those rather than trying to find something really, really unique and innovative in the market.
So you're not answering any questions for people there, Emily, because they're thinking, I just wanted you to tell me which one I should use. So I think key points there is a wide range. There is an element of education on this in terms of understanding which ones are most relevant to you as a business, but which ones are most appropriate to allow you to present that information that you have. I'm going to tie that one up in a second, but just thinking, Yasmin, apologies, over to you. We haven't heard from you in a bit. What have you seen from your side in terms of really adoption of different framework standards and indeed queries that you've had in terms of what businesses should be using?
Yes, I would say it's probably fair to say that in the professional services space, the adoption piece has been a bit slower. Unless, of course, you're listed, then the progress has been a bit more. And the reason I would say that they have been a bit slower, because I guess the focus is really on the E, and that most professional services firms are generally people businesses. So there isn't much to do from that perspective in terms of your environment, other than looking at kind of your own buildings and it being more efficient in the way they operate within those, and then looking at other factors such as travel, which directly impacts on the carbon footprint. Fiona did mention earlier the sort of legislative agenda, which is driving change and focus for corporates on sustainability, and for large listed companies disclosing in line with the task force on climate-related financial disclosure recommendations, which are required by 2022. That's definitely, I guess, fast-tracking a little bit of that adoption process. And then there's also the COVID impact, which actually surprisingly no one's kind of mentioned, but that does have or has had a bit of an impact in terms of the adoption, because we've kind of gone through a period of change in our working practices. And now that we're starting to come out of the pandemic, we're trying to figure out what does it look like post-COVID, and that will have an impact in terms of how we might measure and report on some of those ESG factors. And so, that will kind of take a bit of time. And so there's a bit of a nervousness, I think, from some around really setting targets right now, how they might actually do that until we kind of see a period of stability post-COVID. But what I would say is that, professional services generally have, or they are starting to come out to make public statements or commitments in respect of, net zero by 2050, which is one of the most important. And ideally, it should align to the goals and the timings of the Paris Agreement. And that's kind of what a lot of firms and organisations are working towards. And although some firms have committed to being net zero a lot sooner than that. And then on the back of that, you've then got the S and the G piece around looking at those and what you might think are appropriate targets. I think from what I've seen so far, so companies are saying that they've got their net zero commitments. The next question then is, okay, well, what's the detail behind it in terms of, how have you broken that down to meet that net zero ambition? How will you measure it? How will it be achieved, and over what time frame? And that generally, I think, is a point where things start to stick a little bit, especially kind of as we're coming out of COVID, because there's a lot of questions, particularly around the achievement and the time frame piece. And if companies are looking to align their ESG strategies with their financing, then lenders are there to support in that process. And they should be taking advantage of their banks in trying to help them pull something together around kind of a much more formulated ES strategy. And then if firms are looking to utilise ESG frameworks across the capital structure, and this is kind of what banks will follow as well in terms of looking at principles and determining whether something is appropriate or not from a target perspective. You do now have the Loan Market Association. There's the Loan Syndications and Trading Association, and there's also the International Capital Markets Association, which have all launched sustainability-linked loan principles to try and promote the development of sustainable finance. And that's kind of typically what banks will use also to kind of develop their own frameworks and use it as a benchmark to assess whether the metrics are appropriate and acceptable when it comes to sustainable finance.
Thank you, Yasmin. Lots in there. I'm hearing a few things. I'm not hearing a trend in terms of I'm seeing the whole space using this or doing that. I'm hearing that there are lots of statements which are out there which really are aligning to the market expectation, obviously, as you say, on net zero, etc., which the UK has obviously signed up to by 2050. What I'm also hearing in there is that you have your own framework as well. So everyone is going to be faced with that challenge in terms of that variety of expectations which are out there in terms of what they want to be seeing, what they want you to be reporting. So I think this very much aligns back to our points on understanding your stakeholders, understanding what their asks are from you to help you frame what you're going to need to be doing across this space. So there is very much that upfront exercise in terms of gathering that together. But I would sort of give everybody on the call a bit of light on this. For those of you who aren't aware, there is going to be a coming together of this. There is a recognition out there that there is so much that could be considered. And for the likes of yourselves, Yasmin, Marco, I know that it creates great challenges in terms of that comparability aspect, that word that has kept coming into play. So what is great is thankfully, the IFRS Foundation is looking at a pathway really for global standards that's going to reduce this fragmentation, really allow this comparability and avoid the confusion to help everyone on this space, to help investors make informed decisions on this, to help employees make informed decisions on who they want to work for, or indeed businesses of who they want to deal with in terms of the day-to-day relationships. So there is light there, folks. Do watch this space. We have noted, as I said, just through the conversation today with Emily, Yasmin, a range of other standards in there. I would just flag them briefly. We as a firm are going through our own WEF IBC, using that as a standard. We are doing internationally as well. But you will see out there a range, a real growing momentum actually with the likes of B Core, which is very much a very high standard, which many are examining and perhaps is aspiring to, but see it as a real challenge in getting there. So these are all worth looking like in terms of where you want to be in this space and how far you want to go. So we've touched on a few points there already across the conversation, peppered in the points of measurability, comparability, etc. in terms of expectations. But we've talked about the drivers, expectations, and indeed frameworks to date. And these are all being put in place for a reason. And I'm quite surprised, Yasmin, you said we had only mentioned the COVID word before. I'm quite surprised at this point we haven't yet used the word greenwashing, which came up in our conversations before this. We are seeing regular examples in the market of what you shouldn't be doing in terms of claims on your agenda and statements that you should be putting out there. So what really are those business practices that we require to be put in place to enable real quality ESG reporting, not just those statements, but what has to go with it? So maybe, Emily, back over to you. Maybe you could pick up on some of these attributes in terms of the practices that you see as being the most important.
Yeah. And actually, I am going to start, I'm afraid, Fiona, with the statements piece, because I do think that's important in terms of how you caveat telling the story about your journey. So the strong narrative, being very open and clear about where you are, where you want to go and how you're going to get there is actually really, really important in the context of ESG. And I think it's that being vulnerable, really, almost to say, we're not perfect today, and we understand there are challenges, but we have a way and a journey which we're going to undertake to overcome those. And I think that is really, really important to tell that story. I think there's also a really, really important piece around structuring. So a lot of organisations actually write their own ESG reports, and it's just really, really important to structure it in a way that it's easy to absorb and to support comparability. So clearly a logical structure broken down by the E, the S and the G, or your key focus area is really, really important as well. I think then the next piece really is about the quantifiable element. So, as you mentioned, particularly, well, actually not just in the climate, but across the environmental and social metrics, you need to be publishing, perhaps from a climate point of view, your emissions baseline across scope 1 and 2, also the targets that you are setting yourselves and how you plan to get there. So not only an end state target, so achieving net zero that Yasmin alluded to, but also what your interim milestones are as you go through that. So I think it's really, really important that you have numbers in the report that are quantifiable and support you in backing up the claims that you've made in kind of that qualitative rhetoric that you have throughout. And that's super important, as you said, Fiona, around the element of greenwashing. So without metrics and targets and measurement, you are at risk of appearing disingenuous and could be accused of greenwashing. And I think it's really, really important to make sure that that's avoided from an organisational point of view. And so therefore, every time you list a claim, whatever kind of claim it is, in your in terms of the overall rhetoric, have you got appropriate numbers and targets to back that up? And then I think, just to go back to the kind of framework piece, make sure that it is aligned to standard internationally recognised and accredited frameworks where possible. So from climate, TCFD is a great place to start, or leveraging frameworks such as CDP, and then GRI if you're looking for a broader standard.
Absolutely. I really liked your point, Emily, on the honesty aspect. This is not about producing a fait accompli in terms of I'm wonderful and I do these amazing things. Talk about the journey. Talk about where you want to get to, trying to get to, not just here's my stats and that's it. We could talk about that one at length, Emily. But maybe, Yasmin, going back over to you. I mean, you equally are guiding clients on what should go in the reporting, that level of visibility. You obviously building your own framework, but the level of detail you want to see. What do you expect to see within this?
Yeah, so if I kind of look at firms that have a bit more of an established ESG strategy in their an established developed business, if I first throw in a stat, so in 2020, the loan made up 8% of ESG loans from 2020, and that continued into 2021. So it demonstrates a distinct preference for general corporate facilities over the green use of proceeds of debt. And with that, I have seen a few professional services in that space where indeed we're currently in discussion on having sustainability-linked loans, and that's becoming more prevalent if you look at kind of green versus sustainable financing. From a financing perspective, we generally take guidance from the LMA Sustainability Loan-Linked Principles, which essentially has 4 core components when looking to set metrics and targets. So the first one would be that you should be aligning those with your stated ESG objectives and goals. The targets need to be ambitious and meaningful based on recent performance levels and look to improve the company's sustainability profile. We have in some instances have asked for or have seen third-party opinions, and that's been quite valuable as it provides a bit of confirmation in the appropriateness of targets. And then some have also commissioned company-level ESG reviews to support that process. And the third piece would be around reporting, so regular reporting of the performance against metrics. You usually expect that to be on an annual basis, and then also publicly reporting against metrics may also support some of that investor communication and the broader dialogue around how businesses are doing on their sustainability performance. And then the fourth piece is really around the review, which promotes the confidence and transparency. And that this now needs to be externally verified and reviewed by either a third party or through the audit process. So there was at the start, maybe last year, where it could be done through internal review and verification, but that has gone external now. And one of the drivers of that is kind of Fiona touched on earlier, is around this kind of consistency, and there's so many frameworks out there that we are looking across the industry to see a bit of something that is very similar, and we're not all doing different things, and to try and build up that comparability so that it makes it easier for us to make that assessment, whether it be the lender, an investor, an employee, etc. So that's kind of one of the reasons behind it. And then if I briefly touch on the metrics and measurements, typically we expect to see 2 or 3 metrics. The main one being linked to your scope 1 and 2 carbon emissions is ideal. And then in the absence of this, we have seen targets linked to either waste or water consumption, or the use of renewable energies is also acceptable. The importance is to have at least one metric that addresses the E, and that if you can have metrics across the E, S, and the D, suggest that your strategy is required. For the S, I have seen this being centred around the delivery of community projects, or staff committing to providing the resources and time to certain causes. It has to be outside of what you would do as a business, or maybe over and above that, and then only change the diversity at the senior level. Some of it we have seen creeping across the organisation as well.
Thank you, Yasmin. We were cutting out a little bit there. I think maybe some of the final points didn't come across clearly to everybody. I just think one of them was a particularly important one on it's not just all about the E. It has to be holistic reporting. It needs to be across the E, the S, and the G bit, because there is very much an interplay between them all. So very important. A few other key points just for maybe those who didn't pick up all. There's consistency of reporting there, Yasmin. Pick a framework maybe and stick to it. Don't flip-flop year on year between one and the next, as you want people to be able to see year on year what you have done, how you have evolved. And I think one of the probably most challenging ones you mentioned there, Yasmin, was about one of your criteria was being ambitious and meaningful. Many have just sought to do the basics. So is there really that ambition? Is there really the futuristic aspects set out there? But one point, I'm going to move to everybody in a minute because I am conscious of time and just getting some remarks for everybody on challenges. But a very important one that you mentioned there for me personally was about the opinion side. As what I have seen across my clients really growing momentum over recent years has been that transparency aspect. Yes, there is a need for the measurability, the data component, the consistency in terms of what you're reporting, but to really address this greenwashing point, there is a clear momentum in terms of really looking for assurances on what you're reporting and ensuring that it is in fact accurate and what you're saying is fairly stated. So I've worked with many businesses in terms of the provision of assurance opinions around that, to be across statements, metrics, etc. And we're really seeing that growth in terms of the number of, be it metrics or statements, which are looking to be assured, because businesses are realizing that there needs to be trust in what there is being reported, that it's not just a case of putting out some fictitious statements out there in terms of what is actually happening behind the scenes. So definitely one to consider there in terms of how you can gain additional credibility from an independent opinion from a third party. So amazing how quickly time flies, guys. Everyone's absorbing all the points we've said. Obviously, we've covered a broad range of areas, but let's just think, what is the biggest challenge in the professional services space in terms of reporting? Clearly, there are challenges to the suite of expectations. Maybe I just want to go to you all for some comments on how you've seen businesses respond to this, challenges flagged. What advice would you give them in terms of that proportionality versus right level of transparency? Maybe just a quick one from you, Emily, before we get a comment perhaps from Yasmin and Marco, and then move to wrap up. Yep. Emily, start to you first.
Yeah, perfect. So I think the key challenge that we see is the availability of data, to be honest. So understanding what your scope 1 and 2 emissions are, getting, in the climate space, getting data from your energy providers, building managers, etc., is actually not as easy as it might seem. And that's not least because obviously we don't have the mandated reporting across all areas of kind of our economy at the moment. So actually that can be a bit of a challenge. And then I think also thinking about the sustainability of your supply chain, so how you tell that societal story and about your supply chains and your partnerships, and really being able to measure issues around things like modern slavery and living wages are really, really important. I think the access to that data remains the biggest challenge in this space. But one might argue that is something you should know and understand well. And so you absolutely need to get your arms around it. Unfortunately, there isn't a question of proportionality other than if they're your emissions, they're your emissions. And if it's your supply chain, it's your supply chain. So I can't tell you it's any less onerous for smaller organisations versus larger, to be honest.
There's no quick wins there, Emily, either. Definitely a biggie
I don't
too.
think so, yeah.
What about you, Yasmin? What's your view on the key challenge or recommendation?
Yeah, so on the challenges, the main one that keeps coming up is around what the basis for setting the targets. So COVID has meant that using 2020, 2021 as a base might not be as appropriate. So we're seeing 2019 as a base for setting targets. The other challenge that some have flagged is that trying to set the appropriate target levels beyond that 1 to 3 time year horizon. And so it is expected, and it usually is factored in when we're looking at finance in particular, that it will be reviewed and reset over shorter time periods, even if you were to go out beyond the 3 years, for instance. And then the other bit, actually, interestingly, is around normally we're speaking to finance teams, and they're the ones that are setting the metrics, or actually at least linking them to their financing facilities. So often at the initial stage, there can be a bit of a disconnect between the various stakeholders, especially kind of at board level. You've then got the finance team, and then you might also have ESG teams. And so that has caused, a bit of a delay in getting things in place. But there is a desire and aspiration that they want to do something and try and get agreement, but that is something that is taking longer, and perhaps that's why a lot of the professional services firms have been a bit slower in terms of the adoption piece. And then on the proportionality versus kind of the transparency piece, it probably comes back to the purpose point. Who is it for? Is it what they expect? And does it address what it's intended to do? And the transparency point for me is probably quite an important one. I would say that less is more when you're looking at setting metrics. So if you can set 2 or 3 meaningful targets, and that actually changes the way that you do things now or going forward, especially on the E, then I think that's really impactful.
Absolutely. Your point really resonated with me in terms of the baseline for setting targets. What is that year for those of you starting out? These are not standard years. We've had COVID, we've had the epidemic, not standard in terms of what those metrics may look like. So think carefully in terms of what your baseline is for those who are beginning. And equally, there's obviously going to be fluctuations within that. But I'm hearing there from all of you, it takes time. And it's a lot about the data in this as well. So do make sure you have that time set aside. And I probably would add to that clarity of people who will lead and run on this. This is not a sideline job for people to do. This requires focus and effort in terms of actually making it happen. Mark, you've been quiet for a while. I'm just going to ask you if you could give a recommendation. What would your top tip be to our attendees today before I move to wrap up?
Yeah, absolutely. And I think it's a really good question. So I think that I would be focusing on just making sure that you're horizon scanning what's happening for you in particular, but also as a business, but also what are your clients caring about? Because the key thing that I think may come up is an attitude of complacency and not really understanding how quickly this market is changing and how quickly items are going to be asked of you. Because you mentioned millennials before. Millennials have wrinkles now. Millennials are managing directors and CEOs. So they really care about this stuff, and they're going to be asking questions of you as a service provider as well.
Excellent. Very good points, Marco. By no means a static agenda. Horizon scan, get that knowledge hub going, folks, in terms of gathering the ongoing landscape of expectations. So I am conscious we have reached the end of our time, folks. We always have a few questions, but we will look to pick those up again with individual people who have asked them. So at this point, to allow people to get on with their day, I will just move to some of the wrap up. But firstly, I'd like to thank the panel today for your thoughts. Thank you so much, guys. Very interesting, very much appreciate it. And I mean, just a note to everybody, really over the course of this series of ESG related topics, we've been joined by many who really play a key role in this space. And at BDO, we equally have an army of people who operate across the space and can add further support to the challenges ahead. But I hope that across our sessions, you have seen that it very much is a business imperative to incorporate ESG in your longer term business strategy. So if you haven't done anything yet, I would encourage you to get going, and there are many people there who can help and support you along this journey. So please do feel free to reach out to any of us should you wish to explore any of the areas discussed over recent weeks. Thank you all, everybody, for attending, and we look forward to hopefully seeing more of you in person over the months ahead. Thank you, everyone. I'll draw it to a close at this point. Thank you, Marco, Yasmin, and Emily.